Welcome to Investors Insights, episode number 130. Today we'll be discussing everything on tap for this week. It's a busy week. Also talking about a little bit of what happened last week with the central banks. If you like what we say, let us know as always. Please email us if you have any questions. So guys, let's get started.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at Five Plan Partners.
3, 2. So Greg is in client meetings this morning, so it's the three of us. But the first thing I want to do is tell our clients about some Investors Insight meetings that we have this week and next. And so basically what it is we give you an inside look at our portfolio strategies. And so this Thursday morning at 10 o'clock, we have a coffee with the team. Thursday afternoon at 4 o'clock, we've got a wind down event. And then also next Tuesday for our out-of-town clients, if you can't make it this week, we also have a call-in session next Tuesday at 10 a.m. in the morning. We've also got a wind down event next Thursday at 4. And so if you're interested in any of these events, please let us know. We'd love to see you. And so guys, let's talk. It's a big week in the market.
It certainly
It's
is.
a market that we've had circled on our calendar for a while now. So let's talk about that. So first, really, we've got the debt ceiling fight in Washington. As always, we're coming down to the last minute in Washington. We reach the debt ceiling next week, November 3rd. And so Speaker of the House vote. It's a lot going on in Washington.
A lot of
So,
moving parts, definitely.
also on Wednesday, the Fed is meeting. We do not expect them to raise rates. In fact, we don't think they will raise rates in December either.
Yep.
But a lot of news will be coming out of that. Then on Thursday, we have the GDP report coming out. Second quarter GDP was 3.9%. Economists are saying that's going to come back some for the third quarter, probably around 1.7%. So we'll see how the market reacts to that. And then also a lot of earnings are coming out this week. Big oil companies. So we'll see what the lower price of oil is doing to all these companies and to see how they're holding up. Trey, you mentioned you had some good points about last week and the central bank.
Yeah,
Talk
last week was a big week for earnings as well, but really what drove the market last week, it was a positive week. Had some really strong days, but what drove it really wasn't earnings or U.S. news, as this week's going to be focused on the U.S. Last week, we were kind of focused on international central banks, which is a little sometimes unnerving because it's hard to know exactly what they're going to do with, within their structure being different than ours. But the ECB came out and implied that they may extend their asset purchase program, and that shot our markets up and actually kept our yields down, which is positive for bond holders and equity holders. And then the Central Bank of China came out and cut their interest rates. And that moved our market higher and moved their market higher. So two really big actions from foreign central banks really impacted our markets. We saw a positive. It's actually, and both were built around low growth in their respective areas. ECB is concerned about deflation, as we've talked about, in the U.S. possibly happening here as well. And China's concerned about growth is above 6%. Still, we love for 6% growth, but anything below 7 is concerning for them. And actually, you kind of went more in depth into China.
Yeah, we had a good discussion on that with the Chinese situation this morning. On Friday, as Trey alluded to, the Chinese cut their interest rates. Interestingly, that's the sixth time this year. In addition to the interest rate cuts, they reduced the amount of bank reserve requirements to, as Trey said, stimulate again. The interesting thing we wanted to focus you on this week, though, is the meeting of the Communist Party over the next 4 days, which is their central committee. And what that is in China is really the top 300 party officials. It's called a plenum, Plenum. And they have a tendency to be very historically significant. To Trey's point of the 6.5% to 7% range, one major reason the plenum is meeting now is that with these interest rate increases and the reduction of reserve requirements, the Chinese are having a difficult time finding where the floor of this drop is. And so to Trey's point, what's interesting about this is that you'll see a lot of the discussions in China this week really will be impactful for them over the next 5 years.
Right. It's a planned economy, right? So
Correct.
This group are the ones that make that plan.
Correct. Absolutely. And we wanted to tell you about it now. You'll know more about it in March because these are closed-door meetings, but they have a tendency to rubber stamp that through their parliament, which will be in March. But the reason we want you focused on that is the 6.5% to 7% growth range that they are looking to probably establish. that impacts a third of the world's economy and will for 4 or 5 years.
Yeah.
So it'll be very significant what eventually will get published in the spring out of these Central Committee Communist Party meetings this week.
That is great. That's a great point.
Yeah, I'll tell you, the last week, the market growth is more artificial. And so it's not the economy, it's artificial growth caused by all the central banks.
Right. You're seeing bad news being good news internationally.
Yeah.
We saw it here with the poor jobs numbers back at the end of September, early October, boosted our market. So it's really we're seeing a breakdown of the economy, and the markets are continuing to be disjointed, which impacts portfolios really.
We're watching things closely. It's going to be a busy week. And thank you for watching. And let us know if you have any questions. And we hope you have a great week. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.